You see, every pair has a session that is more volatile. For the case of Euro USD, it is more volatile during London session and New York session because that is where there is an overlap in the market. Then at USD JPY actually during Asian session because that's when Japanese yen is more active. So, but basically focus more on Euro USD. I will wait during the opening of London session, wait for the first 30 minutes candlestick to form. Then I will highlight the high and the low of that 30 minutes candlestick. After highlighting the high and the low, I will narrow down to 5 minutes time frame, wait for a breakout either above or below the high of the 30 minutes candlestick. If it breaks below and closes with the body, I will enter sell. If it breaks above with the body, I will enter buy. Learning the skill is different from having the mindset to trade, you see? Because in as much as you learn the skill or the trading strategy, it only accommodates for 20% of the trading. Not to be profitable, it is 20% strategy and 80% psychology. So it is very hard to mentor someone to master his psychology. From learning to BB Pips, I went to YouTube, learned from those big Forex mentors on YouTube, learned different strategy. I learned SMC, I learned ICT, I learned R or B, I learned price action, indicators, all of them. You see, like while you are a beginner, you are always on a lookout searching for new knowledge.
Traders, ladies and gentlemen, welcome to another episode of the Top Dollar Trader podcast. And today I'm joined by the ambassador himself. So he's coming on, he'll be sharing his experience of the markets, how he's doing his trading, and all those things. And I'm hoping by the end of this session, you are going to pick value and it is going to help you in your trading. So before we get into Chacha, I want to take this time to ask you that you like the video, because when you like the video, then you automatically help me in reaching out to other people. So you can also consider in subscribing to my channel. So ladies and gentlemen, having said that, I want to take this time to invite and welcome Mr. Chacha. So Chacha man, how are you feeling today?
I'm feeling good. I can see today is we are approaching the Easter celebrations.
Mm-hmm.
It's good to have a holiday coming in to break us from the helter skelter of the week. Yeah,
To break that monotony.
yeah.
Yeah, bro. So I want to first thank you for showing up. I really appreciate taking your time and trying to share some 1 to 3 things which you know about the markets to my people. So I don't take it for granted. I want to first thank you for showing up, man.
All right.
Yeah, yeah, yeah. So to start with, I usually want to understand like where somebody has come from. You know, there was a time you never had an idea about the markets, then now you are a trader. So give us that small or long story of how you even got interested in the market and how were you introduced to this field.
Okay, Mr. Omari. I started Forex back in 2022 as I've been to the Forex industry for around 4 years now. Back in 2022, I was introduced by a friend of mine. Her name was Helen Gitonga. She introduced me to Forex trading. I could see the kind of lifestyle she was living because today she could be in Kenya and in the evening she's in New York. You see? So I was so much intrigued to learning what is this lady doing. Then she introduced me to Forex trading. I started, I can remember my account was $100 account. uh, I funded it, of which most of the beginners your first deposit, it can either be you can either flip it or you can either blow it. You can flip it due to beginner's luck. You can also blow it because of the over expectation of wanting to flip the account to bigger money. You see. So back in 2022, I was introduced. I started learning from the beginning, from the introduction. She sent me a link to Baby Pips, where I started learning from what is the definition of forex. See, most traders actually never want to start from the beginning, from the introduction, learn the basic concept of forex. There is no way you can just start a building from the roofing. You have to start from the foundation. Once you have a strong foundation, it is easier to scale up. You see. So from then, from learning to BD Pips, I went to YouTube, learned from those big forex mentors on YouTube, learned different strategy. I learned SMC, I learned ICT, I learned R or B, I learned price action, indicators, all of them. You see, like while you are a beginner, you are always on a lookout, searching for new knowledge. You see a new trader on TikTok teaching a certain strategy, you learn it, you go fund account, you either blow or make money, then you go and find another strategy. Then from that journey of learning, every day constantly learning and improving my strategy, last year I came up with my own trading model called CRW, which I used to trade Euro USD. It has not been an easier journey, it has been a very tough journey with the blowing of accounts, you see. But up to now, I can say I'm perfect with my trading model.
Yes, so you have talked about a lady, then you were influenced by her lifestyle. So she was in New York, she was everywhere. And the funny thing is that most of us traders, especially these days with social media, we are more attracted into this thing by observing people, uh, flash out or having flashy things, all that kind of thing, which is not a bad thing, but sometimes it is so like it becomes like a dream. But again, it is interesting, and I see the difference with this. She was able to place you in a particular pathway, and when you followed this path, you were able to, get yourself learn all these things. So I'm curious now, like the whole of this learning, how long did it take you? Did you take like months? Did you take like a few weeks until you felt like now you are confident into depositing something, then starting out? So how long did the learning process take you?
In forex trading, actually, I don't think if learning has a timeline because you can learn. There are those people who are like I can say fast learners. They are sharp-minded. You can learn forex even just in 2 weeks. You can just learn forex in one day, and you get all the concepts. But it usually narrows down because learning the skill is different from having the mindset to trade. You see. Because in as much as you learn the skill or the trading strategy, it only accommodates for 20% of the trading. Want to be profitable, it is 20% strategy and 80% psychology. So it is very hard to mentor someone to master his psychology. If Omari you agreed, that is your personality. It is very hard for me to coach you to stop now being greedy to being searchable with whatever you've gotten from the market. So a skill can take you 1 month. Example for my instance, I learned it took me like 3 months to learn the whole concept. But even though I had the concept, I never became profitable because sometimes I could take trades due to FOMO, fear of missing out. I could say that the trend is leaving me. I jump into the trend. I was chasing the market. Then at the end of it, I end up blowing the account. Then I say, this was my target zone. Actually, the market came to my target key zone and went back as my anticipation. But I never waited for it to come to that zone. You see? Until last year that I came to learn that you don't need to chase the market. The market will come to your zone. And if it doesn't come, the market is still open the next day.
Yeah, that's interesting. Then now, after you have done all that, and you are feeling like you are ready now to go into the real trading now, did you start out with a demo, or did you buy a funded account, or did you just deposit into a brokerage? So how did you begin now the journey into the real market now?
I know some people may not believe this, but I've never traded a demo account.
Okay.
My first deposit was $100. My first deposit was
Mhm.
$100, which I traded it for 2 months. But even if I traded it for 2 months, I never made any profit. So it's like that instance. Today you are in profit, tomorrow you are in loss. So you are at break even. So I juggled with the $100 account, but I ended up losing it. Then later now after mastering the skill, I kept on depositing. Some point I could flip the account, some point I could blow the account. You see? Until back in 2023 that I came to realize about pro farms. I say, aye. So you can trade with the money that is not even yours by just putting a stake some small cash. You see, for example, I started trading with Funded Next. With Funded Next, I could just stake $32. They give me a $5,000 account. I pass phase one, phase two, and then I'm given $5,000. So I'm given access to larger trading capital more than I can afford. So when you have
Mhm,
larger capital, it means your risk exposure is very small. You see, Omar, if you
mhm,
have a $5,000 account, it makes sense when you say I'm risking, let's say 2% of that account, or let's say 10%. 10% of that account is 500. 1% is $50. So it's very easy for you to say I'm risking 1% of the account to make 2%. So I'm risking 50 to make 100. And like now, when you have your own $50 live account, if you say you are risking 1%, that means you are risking $1 to get two, which will never buy that dream car of yours or buy that dream house of yours. Maybe it will be used to pay for bills, small bills. I'm a hybrid trader. I can say I trade both a funded account and I trade a live account. So on a funded account right now, I'm funded with Funded Next, 150K account and another a 15,000 account. Both of them are one phase. I don't like trading challenge one and challenge two. Just want to trade one challenge. And I also have my own live personal trading account.
Okay. So talking about prop firms, I think prop firms can they can really help you if you have a funding problem, because now they give you leverage which you cannot be able to get. Like now you are trading a 150K account. You see, this is 150 US dollars. It's not easy to find a bundle of 150
Yeah,
to
sure.
trade with. So I also like encourage people to explore this prop fund, because the amount of leverage that it gives you, it is not easy to get it anywhere else. So you
But
talked about fund, yeah.
Omari, on one note, funded
Mm-hmm,
accounts will give you access to larger trading capital, but they are not there to
mm-hmm,
make you profitable. You see? If you are
mm-hmm,
unprofitable, even if you are given 1 million, you will end up blowing it. So before
mm-hmm,
jumping into funded accounts, make sure you refine your strategy. You have a strategy that is workable. Then look for funded account.
mm-hmm.
Yeah.
So I want to ask you, like, what's your experience now of using those funded accounts? Because sometimes these programs, in fact, like you have said, they are not here to make you rich. In fact, these days when you look at pro firms, they have introduced some rules which will limit you from making those profits. So with Funded Next, I want to understand, like, what is your experience with? Have you ever been denied a payout before? Do they have these funny and crazy rules? Like, how are you? And have you explored other prop firms? Have you diversified, or you are just focused on this Funded Next?
So before any trader decides to buy a PropFarm account, I will advise them to go to a website called PropFarm Match. That is a prop farm. That is a website that highlights all the available prop farms in the market and the reviews traders give to them and the years that they have been on operation. You see, before buying a prop farm, you have to consider the years that they have been in operation. A broker that is having like fishy business, it will not be in operation for more than 3 years. So consider, so the older the pro firm, the better. Because for example, for instance, FPMO is the oldest pro firm in the market, but I will always advise for professional traders, not for beginners, because they have very strict rules. Then after now going to Profirm Match, you will find there they've listed actually the top 10 Profirms. For this case, for my case, the Profirm I will prefer to trade with is Funded Next, Funding Pips, Alpha Capital, Maven, and then we have FTMO. Those are actually are ranked the best. So when you go to Profirm Match, you will get the reviews of the real traders, of the experience they've had with the traders. And then with you, you make a personal decision. Then another thing you will have to consider is the cost per account. Some programs are expensive to buy an account, and some of them are cheap. For the Fund and Next, a $5,000 account is going for $32. Then if there is a promotion, it usually goes below as $28. Then now
Mm-hmm.
after considering the price, but some traders will always say that cheap is expensive. So you may find that a program selling a $5,000 account at $1. That's
Mm-hmm.
very fishy. In some instances, in most instances, those people will never allow you to reach payout. Then after selecting the platform of your choice, is you go back to the rules. Read all the rules. You see, people they have like a 10-page rules. Some traders will not mind to read them. So you as a trader, read each and every rule that is listed there, so that while you are trading, you have rules. You are guided by the rules, not trading like you're trading a demo account or your own live account. Then now enter into the business of passing the challenge. Of course, we have those platforms that give instant accounts that you just enter and start trading. But for the case of those who will be trading the challenge, trade it like don't be in a hurry to take your time, because most platforms they have unlimited time for you to pass the challenge. Take your time. Take even if it is 1 month. You see? Because platforms are there to test your patience. Are you patient enough to wait for a setup to align? They're also there to test your greed. So when I speak about greed, they say some traders will take up to let's say 3,000 trades, not
Mm-hmm.
3,000. I can remember there was a time I
Three
was taking. Yeah. There was time I was. You
three
may not be.
thousand trades, man.
I had a beginner who did that. I went to check his MT5 history, and I realized that
Mm-hmm.
he had taken over like 3,000 trades, just scalping. He's opening before the trades enter profit, he's out. You see? So
Okay.
it is going to
Mm-hmm.
test, because in pro farms, let's say if today I make a loss of, let's say my daily loss limit is $2,000, right? No, two
Mm-hmm.
hundred
Yeah.
dollars for the 5K account.
Yeah.
My daily loss is 200, and then today make a loss of 100. With fear of if I take another trade and I lose, it may reach the daily drawdown. I will stop trading at that point. So it will shape your psychology. Then with that psychology, you will transition it to the live account. It will help you in a bigger way.
Uh, that's interesting. But taking 3,000 trades, that is crazy, man. I have
I
not
don't know
done
if
that.
that guy was
But
using.
being
I don't know if that guy was using a bot. I don't know, but I was surprised.
yeah, because even managing all those trades, it is not possible. But
I think,
people have different ways of doing their own things.
yeah.
But now, before we move on, still on the funded accounts, I want to understand something. Somebody gave me a very different perspective. Like you can take a funded account, then you are trading it differently when you are not funded compared to when you are trading it at the challenge level. So what told me that you can trade aggressively when you are on that challenge phase, you see, so that you can get yourself out of that challenge phase. Then now when you are funded, then you start trading conservatively. Like now you are lowering you are maybe the rate of your trading or your percentages there. So I want to ask, like, is it a good mindset, like you are trading aggressively on the challenge phases, then now you are going to trade conservatively when you are on the funded stage?
Normally, trading aggressively, actually, that's not trading. I will call that is gambling. And in most cases, some pro firms will not allow you to do that. When you say like you're trading aggressively, is like you're risking a lot. Recently, pro firms have started introducing some rules like you cannot risk over 1% of your account, or you cannot risk over 3% of your account. You see, and when you say aggressively, it means you will have to risk more than that. And I can tell you, Omari, your personality will still remain the same. If you are aggressive on challenge, you will transition the same style to their live account. So it's you to decide. But as much as that guy is making money, you see in forex is at the end of the day, are you withdrawing? You see, you don't want to
Yeah,
see
yeah, yeah.
know what kind of strategy you are using, but are you able to withdraw? Either you are trading aggressively or you are trading conservatively.
Mhm.
Yeah.
Yeah. Now, like on your trading plan, I want you to tell us like which pairs are you trading, like, and when you are trading this pair, like what is your risk to reward ratio, what is your win rate, all such kind of things there.
Okay, on my trading plan, that's what most traders will like to do. They don't have a trading plan. You see, like Forex is like a business. You see, I was given an example to one of my students. It's like when you want to do a construction, you must have a plan. The architect will come up with the roadmap to that building. I say this building will be built in Nairobi CBD, and this is what will happen, blah blah blah, etc. The same way with forex trading. Come up with a plan. With this strategy of mine, I will be trading this pair at this station. This will be my risk to reward ratio. Such a thing. So for my case, I usually trade during London session. Me, I have one rule. I trade one strategy, one session, one pair. So during London session, I trade the Euro USD
Mm-hmm.
using my own trading model called CRW.
Mm-hmm.
So on my trading plan, I usually highlight
Mm-hmm.
that I will because my trading model has a risk to reward of 1:3 and a win rate of
Mm-hmm.
80%. So
Ah.
if today make a loss, I'm waiting till tomorrow. So it means the entire day I will not be stressing, "Oh, what's the market doing? How is the market moving? What is Trump saying?" You see, that's how you remove unnecessary pressure from your trading. Because some traders I know, most of them they usually sit in the house with their eyes glued in their laptop or their desktop, watching the market.
Mm-hmm.
Every candle is like a pain penetrating through
Mm-hmm.
them. You see? But for my case,
Yeah, yeah, yeah.
just when during a London session, take my trade, either profit or loss, I'm done for the day.
You are done. Yeah, yeah, yeah. In fact, talking about being glued to the charts, I wanted to also ask you, like, how connected you are to the markets. Like, do you do that trade management where you are taking partials, maybe adding positions? I'm aware you are that type. Like, if you have entered the market, you just place your targets, place your stops, then you leave everything for the market to play, either to go to your take profit or your stop loss. So how connected are you? Are you going to stay there to do those trade management, or you just place those targets then leave everything to chance?
You see, for them traders, this rule they usually say, they just say, but they don't implement it. Like set and forget. Like you set your trade and forget and wait for either of the areas to be hit. But it's usually very hard. You may set on your laptop, I'm taking this trade, the buy on Euro USD, then the take profit at a certain point and stop loss at a certain point. But while you'll be walking to the market, you'll always be checking your phone. Like what is happening to the market. You see, but for my case, I will enter trade and set take profit and stop loss. But when the trade will reach at take profit two, I will take partials. Partials I mean 75%, and then move stop loss to break even. So it means I've secured part of my profits, and right now my trade is running risk free. So even if it goes back to my entry, it will be stopped immediately because the stop loss is there.
Yeah, I think it's a good mindset. Like trailing that stop loss, because now if you are into profits, you don't want again to turn a reasonable profit into an unreasonable loss, because it may be a winning trade, but it may not reach that target. So nearly you take a partial and protect that capital instead of it coming back again and hit your stop loss. So
You
I
see,
like that perspective.
Omari, another side, some people don't know how to use
Mm-hmm.
trailing stop loss. You don't move
Mm-hmm.
your trailing stop loss just because the price has moved above your entry or below your entry.
Mm-hmm.
You move your stop loss because maybe the market has gone and done something called break of structure. It has broken the recent swing high or the recent swing low. So that's when, and then it has come and they retested it either at a fair value gap or order block. So that's when you move now stop loss above to break even. You don't just move it randomly because you can just move it to break even. Then the market will retrace back, then take the stop loss, then go back to your desired like zone. You see? So there's some concept you must consider before putting a trailing stop loss.
Oh, okay. That is interesting there. Then you talked about your own strategy. You call it CRW, yeah?
Yeah.
So, like, if you can expound more to us, how is it looking like? What are some of the components of this your strategy?
So for my model, my trading model is RW. Trade it on three pairs: Euro USD, GBP
Mm-hmm.
USD, and USD JPY. And all those pairs are distributed across the three trading sessions. You see, every
Mm-hmm.
pair has a session that is more volatile. For the case of Euro
Okay.
USD, it is more volatile during London session and New York session because that is where there is an overlap in the market. Then at USD JPY actually during Asian session because that's when Japanese yen is more active. So, but basically focus more on Euro USD. I will wait during the opening of London session, wait for the first 30 minutes candlestick to form. Then I will highlight the high and the low of that 30 minutes candlestick. After highlighting the high and the low, I will narrow down to 5 minutes time frame, wait for a breakout either above or below the high of the 30 minutes candlestick. If it breaks below and closes with the body, I will enter sell. If it breaks above with the body, I will enter buy. But there are some factors you have to consider. You have to consider the market structure. Is the market structure bullish or bearish? Or in consolidation? If in consolidation, I don't trade that. Another thing you have to consider DXY, US dollar strength index. Some people don't consider that. And then there are some other concepts I will have to consider an order block and fair
Mhm.
value gaps if they are there.
Mhm. Okay, and how do you factor in maybe fundamentals? Like, each day there are news events that happen, maybe FOMC, CPI, all these things. Like, do you recuse yourself from the markets when there are those news events? Ama you be there, but very careful and trading very conservatively. So, like, do you avoid trading on news day, or you will wait for the news to end, then come into the market, or close all your trades before the news? So, how do you, organize yourself during news events?
Omari, in my instance, in my trading strategy and then my trading plan, I never trade the news. Because in some instances, you may have, like, let's say at 3:30 p.m. Kenyan time, we have news that are coming. And at that news, we'll have CPI at the same time. We will have NFP at the same time. Or we may have unemployment claims at the same time. And the data may differ. So the market will sweep up and then sweep down. You see? So whatever a trader will be doing at that moment is gambling. But if for instance the news finds me in the market, like I had a running trade and the news is coming in the next, let's say, 30 minutes or 20 minutes. If I'm in profit, I will move my stop loss to break even. So even if the news comes in my wrong direction, it will be stopped out with my stop loss at the break even. But in most cases, fundamental, the news will come to supplement the trend of the market or the price action of the market on a higher time frame. The news does not change the trend of the market. It only supplements it on a higher time frame, but on lower time frame it might change, it might make some little shifts, but on a higher time frame it actually complement with it.
With the trend?
So to
Okay.
do the news, I usually advise even my students never to trade the news because sometimes I time it is as gambling.
Y-
Yeah.
Yeah, yeah, yeah. Like, news is unpredictable. I think it is impossible to predict where the candles will move, based on the news. But it's good to get that perspective. Then now you have talked about the higher time frame, then on the lower time frame. But now, in connection with your trading, I want to understand, like, are you doing something like a top-down analysis, where maybe you take the higher time frame to give you, maybe a bias, then execute on the lower time frames, or you are analyzing on a specific time frame and again executing those trades on that specific time frame. So how are you approaching that in terms of executing your trades?
Amara, I think for any strategy, it needs you to start from the top down analysis, like a perspective, because on a
Mm-hmm.
on a on a higher time frame, let's say a daily time frame, it will give
Mm-hmm.
you where the liquidity is, or it will give you the market structure where the market is heading. Then from that, with your strategy, for example, for my strategy, I will begin on a daily time frame. Consider the market structure. Where is the market heading? Because I have like I don't know if it's a slogan. If you don't know where the liquidity is in the market, you are the liquidity. You see? So first of all, consider where the liquidity is. You see, in most cases, the market will go to the liquidity zone and either reverse. You see? So if I know that the market is moving from point A to point B, Then I'm able to align myself as per the trend. It is like a two-way traffic. Let's say the highway. There is no way you can be going against the traffic. You will be smashed. You see? So what you need to do, start from a higher time frame, identify the market structure and the key liquidity zones. Then now go down to your time frame. So if my strategy, even if my strategy will give me a buy and the market structure is a sell, I'm not going to enter that trade.
Okay.
Yeah. So I will advise most people to begin with the top-down analysis because it will give you a clear view.
So for you, which time frames are you looking at? Which is your higher time frame, and which time frame are you executing on?
So my higher time frame is daily and
Mm-hmm.
4-hour time frame to identify key
Mm-hmm.
zones. Then I will narrow down now to 30 minutes. From 4 hour, I will come back to 30 minutes.
Mm-hmm.
And then I will
Okay. Then
go
you are
down. I will go down to 5 minutes to find my entry.
okay. So on average, how long are you holding on to your active trades? And do you limit your trades like to a specific number? Like in a day, how many trades are you going to take? Will you take two? Will you take like five? How many?
For my case, I only trade once during a London session. So I will take one or two
Mm-hmm.
trades, two running positions.
Mm-hmm.
And at the time I will hold them, it will depend if it has reached my target, take profit or stop loss. Because some days the market can be very slow. For example, yesterday there was no volume in the market until there was news. So the whole of the since London session, I was holding the trade until New York session. So it will depend now with the volume. The period I'm holding the trade depends on the volume in the market or the liquidity.
Oh, okay. Very nice. Very nice. Then you see, most of the time when you look online, you see traders, forex traders are associated with big machine on them too with a 20-inch screen, several screens there. So it confuses me. So I wonder, like, is it for you to be successful, for you to be profitable in the markets? Do you really need all those screens, or somebody can be even on the phone and still be making profit? But now, personally, like for you, how are you doing it? Do you have those sophisticated systems, or you just have maybe one laptop and executing on your phone?
You see, having just your laptop is enough for you to do anything you need. Even not necessarily a laptop, even your iPad. If you have an iPad or you have a phone that is good, is enough for you to start trading. But for my case, in the future, I may want to have those big sophisticated screen just for me to feel good, but not for me to become profitable. You see, for example, Omar, right now, if I enter online and I'm trading with a laptop or with my phone, it will be very hard to convince beginners to start joining me. But what if I have so many screens like Wall Street? Like I'm trading in Wall Street in New York. Beginner will be so much convinced to come to me as compared to the person trading in their iPad.
Mm-hmm. So I think having those systems, it doesn't necessarily translate to profits. It is for the eyes. To get that maybe followership, or to get more clients, especially. So you can be on your phone and still make profits. But now the disadvantage with your phone, it doesn't give you that enough screen estate. That real estate. You cannot be able to maybe read your charts well. If you have maybe something bigger, like it can enhance that visibility, but it is not again that necessary. So that is
Yeah,
very interesting. Yeah. Now I want to understand like how you are doing your risk management. Are you conservative or you are aggressive? Like, do you trade in percentages, or a certain percentage of those you account, or generally enlighten us on how you are doing your risk management?
so in most cases, I usually risk 5% of my account. See, sometimes it is
Mhm.
unrealistic to say you are risking 2% in a $1,000 account.
Mhm.
But if I say I'm risking 5% of my account, it is a considerable amount I'm risking. With the risk of 1:3, you stand a higher chance of like making more profit. But now, how can you say you're risking 1% and you're having $100 account? It's not reasonable. So your risk actually depends with the kind of account you are trading. If today I'm trading $100,000 account, I'll be risking either 0.5 or 1% of the account. I have one of my students who is actually trading on $152,000 account, and that person actually usually risk $500. That doesn't even equate to 1% of the account. The person risks $500 to get $1,500 to $2,000, which does make sense because if you are living in our current developing economy, in a Kenyan economy, and you are getting $1,500 per trade, in 20 trading days, let's say you become profitable just in 10 of them, you are on a good note. You're actually earning the same salary close to a speaker of the parliament.
Very interesting there. So so you are trading 5%, but that is 5%. Then you are trading on a funded account, or you have different risk management, because if you are trading 5% on a funded account, I think if you are unlucky, then you hit 3 losses in a row, which is very normal. Then it means that account is wiped out. Or are you using this 5% on a personal account, then using other risk management measures on these funded accounts?
On funded account, the risk management is very different because in the past I told you I risk as per the capital. If the capital is high, I will risk less. If the capital is low, I will have to risk high to increase my profits. So for the funded account, I will never risk more than 1.5% of the account. So it means I will have to go to like over 7 trades consistently losing for me to breach that account. And if you will be losing 7 days consistently, it means your strategy is not working. You need to sit down and backtest and refine it.
Talking about backtesting, tell us the platform that you are using to backtest, and maybe how you are doing this backtest. Like, do you only backtest when you are trying to try out a new strategy, or you have regular maintenance, maybe of your own strategy, where you have sessions you want to backtest, maybe to see if the strategy is still working? But I want to understand, how often are you doing this backtesting, and on what platforms are you doing the backtesting?
Okay, to begin with, the platform I use for backtesting is called FX Replay. It is free of charge. You can also do backtesting on a trading view, but it has to be a premium trading view. So, but on FX Replay, it's absolutely free. Just go and choose the market you want, maybe Euro USD or the gold market. Then go back to the period you want to backtest it, maybe 1 year or 2 years. So for me currently, I'm not doing the backtesting because I'm not interested in learning any strategy since I have mine. So usually advise traders, once you have your own trading model that is working over 50%, just sit down and find ways to refine it so that it works better. There is no other profitable strategy. Being profitable begins with you, not with the strategy. So the last time I backtested was the last year, while I was doing my own CRW model. Now, since it is working, I don't need to go back every day learning. Because when you start now to go and start learning another strategy, it's like you are resetting your learning curve. Let's say today was 20% learning CRW, then tomorrow I see another influencer on TikTok teaching ICT. Then I drop learning CRW and go start learning ICT, which I will have to go and start from 0%. So find your own trading model and refine it, make it better.
Okay, interesting. But now, talking about, you have mentioned ICT, then you have your own strategies, CRW. So, like, how has been the strategy progression? Like, before you traded there, or you developed this CRW, like, were you trading supply and demand? Were you trading that ICT? And how has been that progression to now developing your own strategy?
You see, I'm that kind of trader who will want to trade every day. And with the ICT, some of his trading strategies may give you 1 or 2 trades per week. So I went and borrowed some concepts from ICT, some concepts from SMC, some concepts from CRT. And then I came and then say, if I bring this concept to this side and this concept, and then I combine them, can they give me a trading model where I can find an entry every day, at least 2 entries? Then boom, that's why CRW came into being. At the initial, it was profitable 60%, but after going back and refining it, I took over 360 trades, trying to find on which session is this model working best. Is it Asian, London, or New York? Then I found that it is working best during London session. In London session, it was profitable up to 80% in some months. Then I say it is good. Let me go with London session. So I started focusing on London session. One trade till the next day.
Okay. So I want to understand, like, if you are doing journaling, because I think one way to maintain profitability, you have to know what you are doing and how you are doing it. And one way to do that is to be able to record your trade and your trading activities. So, with experience, have you moved on from trading, or from journaling, or you are still journaling? And in this your journal, which are the most important data that you are collecting, and how is it helping you in your trading?
As we had talked earlier, like trading is like a business. And in a business, there is no way you can say, since my business has grown and it is making consistent profits, now I should not be tracking my progress or my assets and liabilities. So it's the same way with the Forex. No matter how profitable you are, journaling is mandatory. Because as I usually tell my students that you can't fix what you can't track. You see? So I can't fix what I don't know what happened last week, what happened last month. So for journaling, the way I journal my trades is first of all, on my journal, because I use Notion, is the session I took the trade, the pair, the bias which can be buy or sell, the entry point and the exit point, and the risk to reward of that trade. With this information, if I take a trade today, next week, and next month, I will come back with this data and analyze, and I see I took trades in London and New York session, but it seems like most cases in New York session, they were hitting stop loss. Now I want to fix it because I can track it. So I will go back and fix it and move on with the sessions that are more profitable to protect my account.
Okay. Then now I want to ask you something. Like, at this moment, maybe you are profitable, but in one point in time, there was a period where you were struggling. So I want to you to go back. Like, what are some of the things that you really struggled with? Then now, when you are able to work on them, then a given time, you are able to transition now into making profits from the market. So, what are some of these one, two, three things that were hindering you, and how did you work on them till now you are in this position that you are at least making profits from the market?
So one thing that hindered me in my early stages of trading was over trading. You could find we've taken up to 50% in one single day. You are making profit. Like I can remember there was a time I had funded $200 and I made a profit of $80. That's a very big money compared to the amount I invested because everything is based on a return on investment, ROI. But I remember I ended up blowing that $80 plus my initial capital. Reason? Over trading. You've already made your profit, which is higher. That's like almost 80% of the account. And then I'm here still adding more trades so that I can flip the account and go and buy that Ferrari I saw on TikTok fellow traders driving. So overtrading is the most is the biggest challenge facing beginners. Another thing is some people are trading due to boredom because right now I can be bored and say, why can't I enter that MetaTrader 500 press a buy? I can make money. So some people are trading due to boredom. They are bored. Then another thing is over leveraging. You're opening account a $50 account and you're looking for an 3,000 leverage. You want to open as many positions as you can. Remember, in as much as that can make you profit, can also make you lose money. Another thing is the greed, which as I've talked, you've already made maybe 20% of your account, and you still want to go back and make more percent. And right now, Mr. Omari, there are so many investment options available in the market. We have money market fund, we have treasury bonds, we have treasury bills, we have IPOs, we have shares and stocks, and we also have like circles. And in all of those options, none of them gives a return of over 20% monthly. The one that maybe is Mansa X Capital is the one that gave last year over 20%. But the rest of those options, they don't give you above 20%. And that we are speaking about annually. So in your case, if you can be able to make 10% or 20% monthly, you are already ahead of the system. But some people are not able to embrace that.
The, there are no markets that will give you maybe 80%. They are like those bonds. You are given just small percentage over time. But now I want to know like how you handle your losses, because now being in the market, it is not every day that you will be presented with those wins. Now, like on those days when you are in a deep drawdown, how are you going to handle yourself in those deep drawdown? Do you reduce your lot sizes, go conservative, or you will totally leave the markets, go maybe do other things and reflect on those trades, then come back? So how are you handling those deep drawdowns when they come?
You see, Forex being a business, and any business
Hmm.
must have losses. You see, it is part of the growth. You see, and
Yeah.
for example, in Forex, since you have our trading model, let's say it is working 60%. If I lose today, if I lose today a trade, I will know the trade I've lost is because of the 40%. You see, and I know tomorrow I'm going to recover it. So if you are a disciplined trader, today make a loss of, let's say my account is 1,000 and I make a loss of $20. I know if in 10 trades, if we take 10 trades, since my model is 60%, I'm going to have 6 winning trades and 4 losing trades. So this trade is part of the 4 winning trade. It's not going to affect my mental state. You see? But if you are over trading and you don't track whatever you are doing, it is going to affect
Mhm.
you, because I may lose today and I will continue taking more trades to revenge, call it revenge trading, and compensate what I've lost, and we may end up
Mhm.
blowing your account. And for my case, I usually analyze my trading on a monthly basis or quarterly basis. Like, what have I achieved in a monthly basis? Not what have I lost in one trade, because that can confuse you. So if you move from that state of what have I achieved in 1 month period, you will not have like those mental instability, like you are worried because today lost $50. So what is gonna happen next? No. So that's why I usually even advise beginners and those people who are seeking for people to manage their account. Before you want to take someone as your mentor to teach you, ask him, sir, can you please show me your 2 months trading history? Sir, can you show me your yearly monthly trading history? Because most brokers offer that. You can download that, your yearly trading history or monthly or quarterly a year. Before you give someone an account to
Mhm.
manage for you, you don't just give someone an account to
Mhm.
manage you because you've seen him on TikTok flipping $100 account to 1,000. You can't judge someone from that one trade, but I can be able to judge you enough from trades taken over 4 months. That's quarterly, or 3 months. That's quarterly a year. I can see your trading history, the deepest drawdown you went, and the highest profit you made. And then I say, if this person was trading $1,000 account, and the deepest drawdown he has ever went was $20, then this person is trading with proper risk management. And like that person we've seen flipping $100 account, there are those some days that you will go to a drawdown of 100%.
And most of them, they usually don't show you those drawdown or those losses. And interesting enough, I remember you somewhere, I think on Traders KE, you were talking about the MetaTrader server, that some people can be able to purchase a server, then they are able, to edit on trades, remove those
Yep.
losing trades, add on to. I want you to expound more of that, because I didn't. I am not aware of the server. How does it work, and how can somebody be able to do that editing?
The only part that you can't edit in trading, like the platform, is C Trader. If you see have a MetaTrader 4, MetaTrader 5, you have C Trader. You also have you can take a trades on trading view. But on MetaTrader, it's like now having the
Mhm.
back end side of a broker. You see, I
Okay.
can just
Mm-hmm.
decide right now and say I want to delete these losses. So we delete and present
Mm-hmm.
you with a good report, a very fine report without losses, but just profits and withdrawals. So it's good for people to be keen, because if you say that
Mm-hmm.
I've done this withdrawal, can you show me an email supporting it? Can you show me a bank statement supporting that on this specific day I made a withdrawal and here is the evidence? So it's not even mandatory for someone to have like the MetaTrader server because it is expensive. Someone can also have, like, you see brokers, they have something called a marketing account which they give to Forex influencers. So can come under Omari and I give you an account, written real account, your credentials are there, nothing like demo. So that you see, it is very hard for me to convince someone while I'm trading a $200 account. But whatever broker gives you a 20,000 account. So someone may trust it because if this guy can manage $20,000, he can be able to manage my 1,000 or 2,000. You see, which is not real.
Yeah. I think that's what most influencers out here are using to lure more clients and everything. But we are on the tail end of this conversation. But before I let you go, I need to ask you some basic questions, just 3 questions, so that I can get your perspective on them. So I will want to know, like, you have gained some experience now in the market. Then, if you have to go back, what are some of the things that you will do different? That instead of it taking you this long, maybe a year, to make those profits, can be able to, shrink that time into maybe 3 months. So, with experience, knowing what you know now, if you go back again, what things can you do different?
So the first thing that I will do different is first focusing on refining my psychology because it is the one that messed me in a bigger part. You see, most of the trades that I lost was not because my strategy was worse, was because my psychology was worse. Over trading, FOMO, over leveraging, full margin, news trading. I will avoid all those and focus on my psychology, being stable, taking 1 or 2 trades per day, finding one strategy and sticking with it.
So, yeah, so you can give us, the one trading resource that has been very beneficial to you, which you have depended on, and it has helped you to place you in a position where you are today, and you are making profit in the market. So, for a beginner trader who is looking into to finding a new strategy, or polishing their strategy or their edge, like, which one resource can you point them, and if they go there, they can be able, if they lock in that resource, they can be able to elevate their skill. So it can be maybe a book, a psychology book, or a website, or a channel on YouTube. But which is the one resource that has been very beneficial to you?
So one of the major resources actually every beginner should know is the Baby Pips. It is a website. It's www.babypips.com. There they will teach you from the foundation, from the definition of forex, candlestick, pips, and all those terms. Then I can say after learning now having the foundational skills, find a mentor to guide you. Now having the basic knowledge, find a mentor. You can either decide to come and teach you CRW model. It's very simple. One day and you are good to go. But even after mastering the skill set, work on your mindset.
Yeah, it is interesting to talk about baby pips, because it carries the basic knowledge, basic principles of trading, and it is free. Anybody
Yes.
can be able to access it anywhere. Yeah. So lastly, I want you to maybe give us one advice about the markets on life general that you have ever received from anybody. And this advice, it has also been able to, help you to make maybe profits on the market or anything in life. So what is that one thing somebody has told you, and when you look back, you feel like this one thing has really helped you?
So one of the advice I once received is look left, trade right. You see, when I say look left, trade right, is when you are doing the analysis of the charts, whatever you are doing is as a result of what you have analyzed in the chart on the left. But now some people don't do that. They are trading what you call their dreams. I want to buy a Lamborghini or I want to buy a Mercedes Benz. So whatever I'm trading on my mind is how can I flip this $100 account or $1,000 account to 1 million? You see? So what make sure that whatever you are doing, because the reason as to why I usually differentiate trading with gambling is with trading you have past data to look on, then do your analysis or your judgment based on the past data to anticipate where the market is likely to head. So look left and then trade right.
Ah, that is interesting. That is interesting. And I'm very sure people at home are going to pick value from this. And I want also to take this time to thank you again, because you have shared a lot. and it will be very helpful to many people out there. So, ladies and gentlemen, that has been my time. If you like the episode, you can give me a thumbs up, and also you can remember to subscribe to my channel. So, having said that, ladies and gentlemen, I want to leave you there. So, peace. But maybe, Chacha, if there is anything maybe you want to tell these people, if you want to invite them to your classes, I think, I can give you this last chance and talk to them.
Oh, with my classes, I have classes ChachaForex Academy where I train traders from beginner to advanced levels. They can just find me
Mhm.
on ChachaForex Academy on TikTok and on Instagram, and on LinkedIn they can find me on Chacha Rioba.
Yeah. So, ladies and gentlemen, to reach out to Chacha, you can check, I'll put your links on the description. So you can go down there and be able to reach him directly. So until next time, peace.